Hi guys, welcome back to the channel. If you are new and we're passing by, please consider subscribing. I would really appreciate it. Like this video, I would really appreciate it. Please like this video. If you have comments, questions, thoughts, please leave them in the comment section below. If you're looking for indicators to download, indicators, robots, systems, stuff like that, there are links in the description box below. Visit those blogs, go through them and see if you cannot find what you're looking for. Then you can always come back and leave a request in the comment section below. So let's get into today's topic. Did I say like the video? Please like the video. Today's topic, we are talking about indicators that are used by traders at the big banks, traders at hedge funds, at the big institutions, the institutional traders. What are their secrets? Like you, I was fascinated by this question. I think I devoted the last 3 years of my trading journey to try and discover what is the secret of these guys. You know what they say, every trader wants to swim with the sharks. They are the big sharks, so you just want to swim with them, and when they make money, you also make money. By the way, the big banks, hedge funds, institutions, they are moving about 80%, more than 80% of the $6 trillion that are traded in the foreign exchange markets on a daily basis. So it pays to have an insight into how do these guys do it. So over the past 3 years, I basically watched many videos, followed many podcasts, read many books from these former hedge fund traders, former bank traders, just to get insights into how really do bank traders trade. Really, you'll be surprised that these guys are using some of the simplest ways to trade. If you find us retail traders, we've got so many things that we add to our charts, indicators for this, indicators for that, indicators for this, indicators for that. Really, these guys don't care about all of that. My understanding from all the research that I did is that they use little to no indicators. Most of their trading, if it's considered an indicator at all, most of their trading is actually based on fundamentals. They are big on fundamentals. That's one thing that these guys pay attention to. Then around about 30%, 20%, depending on who you talk to. Then they've got some technical analysis in there. So maybe we talk about technical analysis because that's where the indicators come in, your oscillators, your trend lines and stuff like that. So mostly what I found from my research, of course you can leave your own comments, your own thoughts in the comment section below. What I found is when it comes to technical analysis, the hedge fund traders actually rely on the simplest of indicators. Most of them, they use moving averages. They also use trend lines. They love trend lines and support and resistance. Those are kind of the top 3 that I found during my research. They not worry too much about the RSIs, the stochastics, and all those fancy tools that you find retail traders are using. Partly it's because, well, they are the guys who are moving the market, so they don't need all of that. A typical morning, from my research, a typical morning for a bank trader is they wake up, they gather some news, and before they head out to their trading desk, they actually have an idea of the prices that they are targeting with their billions. So the goal actually is they want to buy as low as they can and sell as high as they can, and make money in the process. That's their goal. So you find that they don't really worry too much about indicators, because before the trader leaves home, he knows, say we are looking at Euro USD, probably he knows at 1.21000 is going to buy, and is going to buy until 1.21500. With that, you must understand from my research is I found that they are also big on what are called psychological levels. For example, when they go to their desks, they are not aiming for random numbers. For example, the bank trader knows that they are aiming for Euro USD to be bought at 1.20000. They are big on round figures. They love round figures. They don't worry about buying at 1.21373, some funny levels. No, they are watching those round level numbers, maybe the halves and the quarters. I think you need to read about the quarters theory and stuff like that. So basically, before the traders hit their desks, they already know the prices that they are targeting. So there's little or not much technical analysis involved. Of course, they want to go with the trend. That's why they rely on moving averages and support and resistance and trend lines. They want to just go with the trend. But with that also, they are just big on news, because they are going to be masking their movements behind news. When news hits, then they can use that as an excuse to move the market down or to move the market up. So that's basically how these bank traders trade. And from one interview with a former bank trader, he actually was laughing that when he left the banks, that's when he had to actually start learning to trade like retail traders. Otherwise, when he was working within the banking system, he basically had his billions of dollars or millions of dollars that were allocated to him, and basically in the mornings he knew that at this price level, that's where he's targeting, and he's going to target that price move to such a level with the pair that is trading. Of course, they are going to be taking orders also from clients and also doing their own trading, but it's that I don't want to mix up things with this video. So if you are wondering what indicators do bank traders use, understand that most of the time they are relying on fundamental news. They need fundamental news to move the markets, to mask their movements. Then a little bit of that, around about 30%, 20%, maybe 40%, depending on the person that you talk to, but very minimal is devoted to technical analysis. That's where they plot their trend lines, and they plot their moving averages, and they also watch support and resistance. And when it comes to support and resistance, they are mostly watching round figures, psychological figures, because they've got billions. Why trade at 1.31130? They are not going to trade that. They are going to trade 1.30000 or 1.40000 or 1.35000. That's the levels that they're targeting. They don't worry about all these funny levels that retail traders are going to be worrying about. So I thought let me just answer some of your questions concerning bank traders. If you want to be trading like them, first of all, so yeah, that's how bank traders trade. At least that's what I found from my 3 years of researching on this topic. I'm still researching on it. If you've got thoughts, if you've got ideas, what you also found out, uh, yeah, please leave your comments in the comment section below. I'd like to hear your thoughts. Until next time, bye.